This is a seminar series that is about sharing information about the newest trends and emerging kind of developments in the entrepreneurship ecosystems for high-tech industries in Asia. It's presented by the U.S. Asia Technology Management Center, which is completely industry funded. And I do want to say thank you to all of our 18 member companies for supporting us. This is why we can put these programs on. We will be doing this every Tuesday through June the 3rd. I can't read. It is a hybrid format. If you're a Stanford student, Stanford policies that you should be here in person. But it is a mixed audience, and we're happy to welcome casual attendance. We're happy to welcome people coming here, or watching by Zoom. We have people literally watching from all over the world, and we're delighted to welcome you. If you're a student taking the course for credit, then you have 3 choices for registering, and it is open to all undergrads and grad students. There are no prerequisites. You can repeat the seminar for credit because the content is different every time we do it. Do be careful. Please get the syllabus and make sure that you see exactly what we're expecting in order for you to get course credit. Regular attendance in the classroom, but also email me a weekly comment about the content of the series, about the content of the session that you just watched. If you do need an accommodation, please send me a copy of your letter from OAE, or at least let me know in advance by email what you need. If this is conflicting with a required course, for instance, we might waive the on-site attendance because you can watch these by video. So just let me know what your needs are. The comments are due within a couple of weeks of the session. Should be something that you could have only gotten by watching the session, not just by looking at the slides online, because we are going to post the slides after each one of these. For this course, generative AI is not really appropriate. So they are considered unpermitted aid by the Stanford Honor Code, and the use of generative AI in doing your comments will be considered plagiarism. So if you send me a comment and it's unacceptable, I will send you a note back and say it's unacceptable. Then you have to rewrite it, okay? But rewrite it until it's acceptable and I will accept it. So that's the business side of the course. We hope that you'll really enjoy it. What we're going to talk about today is really, first of all, a little bit of broad economic context, how Asian economies are really showing resilience during a time of great economic uncertainty. Then we're going to talk about entrepreneurial activity and attitudes in major Asia economy, other ecosystem trends in Asia, and hopefully we'll have some time for discussion. For those of you who are on Zoom, I will probably not see questions that you put into the chat window, but Kimberly will flag me whenever. And for people in the audience, you're welcome to interrupt me, okay? Just raise your hand or throw something at me or whatever. We'll keep going. It's amazing that a lot of people are not aware of how big Asia economies are. These are the members of the $1 trillion club, economies whose gross domestic product is over $1 trillion when calculated at purchase power parity. So that's not the real exchange rate. That's what you can buy with the amount of money in, kind of recalculated in what you would buy if it was dollars in the US. So the world economy is about $184 trillion by that calculation. The single largest economy in the world is China. Now, of course, China has 4.5 times as many people as the United States does. So sure enough, the per capita GDP in China is just a little over the world average. about $24,000, whereas in the US, it's all the way up to 82,000. The next biggest country is India, also with a lot more people than the US has. So the per capita GDP is really only $10,000, which is definitely down in developing economy range. Japan is the next largest economy than that, not counting the European Union as one market. These are the 5 biggest economies in the world. Germany would show up as number 6. So, you know, you're looking at major kind of things this way, but also, you know, recent entries into the $1 trillion club include Vietnam and Malaysia. The interesting thing is, look what's expected to happen in the growth rates of GDP in these different countries for the next couple of years. The World Bank, which is the source of all of these numbers, recalculated their world growth rate at 2.7%, down from 2.9% that they expected in January. And the first thing that they will tell you when you go to their website is this is not enough to sustain economic development worldwide. So 2.7% is not great. The US is starting out ahead of that rate up to until last year, and it will be significantly below the world rate in 2025 and 2026. China is above the rate, but there's one problem with the numbers in China. And that is that the Chinese government has said that their goal is 5% growth. And anything lower than the government goal is not great in China. So the single largest growth, the highest growth rate of any of these countries is in India, where it's expected to be over 6.5% for the next couple of years. Japan and South Korea are both very low rates, but that's actually equivalent to what you'd find in Western Europe. In general, the more advanced an economy is, the greater the GDP, the harder it is to increase by 2 or 3%. 1% of a gigantic economy is a lot more than, you know, 10% of a much smaller economy. So Japan and South Korea have slow growth rates, and they're not particularly happy with them, but definitely you know, kind of comparable to what you would expect for an advanced economy. With the exception of Thailand, which is kind of slow growth rate, still exceeding or equal to the world average, Malaysia, Vietnam, Indonesia, and of course India and China are all well above the world growth rate, which is an indication that Asia is continuing to be the engine for world economic growth. This is just note so that if I forgot to mention any of this when I was talking about the numbers, I had it here. Yeah, so the size of the markets is one of the things that's going on in Asia. They're already large economies. There are, what, 700 million people in Southeast Asia. And spending by a new middle class as these economies continue to develop. The other thing that's going on is geographic adjustment of supply chains. As the US kind of throws up barriers to trade, trade is going to run between other countries. Unfortunately, the overall outlook is extremely uncertain. JP Morgan just a few weeks ago has forecast that increased their probability of worldwide recession from 30% in January to 40% probability on March the 7th. And what will happen with the US tariffs is not really clear. A lot will depend on the degree of exposure to American trade that different economies are having. So the highest exposure is in Vietnam and Taiwan. Thailand is also pretty high exposed to the US economy, and so the the tariffs will have a much bigger effect on those countries. South Korea is highly exposed in some metals like aluminum and also in electronics exports. Less exposed, it's surprising to me that Japan is not any more exposed to American tariffs than it is, despite all the Japanese cars. Large percentages of Japanese cars are already being made in the United States. And the Japanese economy is big and it has the potential to export to other places, rest of the world. India is also a very big domestic economy and has not been too exposed to the US in terms of trade. The situation with China is not just American policy and depending on your point of view, how much the Americans want to keep China down. It really has to do with some domestic economic problems. Consumer confidence is at an all-time low in China. And also there's high youth unemployment in China. And the debt burden on local governments is very high. So China's actually in a tough spot. To be able to pull 4.8, 4.9% growth out of that is really quite remarkable. And China is not just sitting and waiting for things to happen to them. They are aggressively making foreign direct investment all across Asia and really rest of the world. And they're changing their own supply chains to fit the China market and other growth markets in Asia as well. So you're seeing continued, increase in trade that does not involve the United States. So ASEAN imports from China continue to go up ever since COVID, and they're steady in terms of the exports from ASEAN to China. So the amount of trade inside Asia is continuing to pick up and will be a major player. Last fall, when we were starting our series, I pointed out that the major Chinese automakers have invested great amounts of money in Thailand, building factories and so forth. So this is the kind of general thing that's going on. Uncertainty, and Asia continues to do fine, thank you. I mean, it's not that people are not going to hurt, but Asia is still kind of the engine of economic growth, and really it has been for the last 30 years. So if we look at the entrepreneurship ecosystems, want to make a distinction between a startup, especially a Silicon Valley style startup, and a small medium enterprise, small and medium-sized business, an SMB or an SME. Startups are started to bring something new into the world, and the idea is that they will have an exit. There will be a change of ownership at some point in the life of this company, either by going IPO on a public stock market exchange, or by being bought by some big company. In contrast, a traditional small and medium-sized business is typically focusing on long-term stability and profitability, usually in an established business line. There may be changes in ownership. They may be bought by somebody, or even if the founder keeps the company forever, eventually the founder dies and there has to be a change of ownership. But this is the kind of thing where if you're talking about statistics for who's an entrepreneur and who's not, you really do need to consider how to deal with these two very different types of starting and running a business. I'd go on and say that Silicon Valley has a particular model for startup company growth that is extreme. We, investors in Silicon Valley will typically only provide funds to a company that has the potential for great increase in value, which means rapid sustained growth to a big exit. 1/4 of all of the world's unicorns are located in the Bay Area. So also, the kind of classic technology play for a startup company here is because of the need for upfront capital to finance a relatively long term of technology development. Nobody planned this, but the venture capital industry has had a major impact on how we think of what startup companies are. So with that distinction in mind, let's look at innovation as kind of the key to understanding Silicon Valley style startups. So if you're going to look at an ecosystem for innovation, you're looking at the interrelationships for different functions of three major factors, three things that have to move into a new combination in order to deliver an innovation to market: people, capital, and knowledge. So the system has to have sources of all of those three elements, and it also has to have dynamics that will either promote or hinder the flow into a new combination. When you're looking at a startup company, it's pretty easy to tell. Where do the people come from that are entrepreneurs? Yes, okay, Stanford is famous as a wellspring of innovation, but most of the people from Stanford who start companies go out and work in a big company for a few years first. You want to have your own money you can put into the company. It's good to get some business experience. And the biggest thing is the market timing right for you to start a company the same year that you graduate? If it's not exactly the optimum market timing, go get some real money from another company and some experience first. We also have an awful lot of serial entrepreneurs in Silicon Valley, people who don't particularly like to run a big company. They would much rather start something, take it to exit, then use their money and start something else. The money comes from these people as angel investors. At the very early stage, you have government loans that do help companies commercialize their technology. You have venture capital really plays into this at a later stage. Very rarely would venture capital be the first professional investment money into a startup company. So the knowledge and ideas have to come from somewhere. Certainly, the research universities in the Valley are a big source, but also it has to do with problem awareness. No business is just the technology. That's not the seed. The seed is how you apply that to a particular problem. We're a great place where people talk about opportunities. Every time you get into Silicon Valley networking, the topic of conversation tends to gravitate toward what's the next new thing. So this is sort of how you would apply this to starting up a company, which means that the first thing to look at is people flow when we're talking about different ecosystems in Asia. So to talk about people flow, like every survey in the world, the Global Entrepreneurship Monitor annual survey has things that could be done better, but it's what we have and it's pretty impressive. They're looking at samples of over 2,000 people in over 56 countries every year. So it's a survey of somewhere around 150 to 180,000 people every year that's conducted by national teams. The survey in China is conducted by a group at Tsinghua University. The Japan survey is conducted by 4 universities in Tokyo. And the Global Entrepreneurship Monitor offices kind of serves as a partner to make sure everybody keeps to the same standards. That's what the survey we're going to be using now. I'm not going to use the other survey that they do, which is a survey of experts in each economy. It's a little too subjective for my taste. When you get to the actual participation rates in entrepreneurship by people in the economy, at least that's relatively not subjective. This survey has been done yearly ever since 1999. The most recent was released in February this year. And there's also a good database of country-specific data that the following slides come from. What we're going to be looking at is what they call the T rate, total early stage entrepreneurial activity. This is either people who are actively involved in setting up a new business, or they're owning and managing a company of a new business that has paid salaries for less than 3.5 years. So you see, this intentionally avoids making a distinction between traditional SMEs and startups. It also would include people who are entrepreneurs because they don't have a job. We call that entrepreneurship of necessity, or because they see an opportunity, and even though they could have a job, they choose to become an entrepreneur in order to seize that opportunity. So that's what we'll look at from now. The T rate in the United States has risen from 12.8% way back in 2012 to 19.3% this past year in 2024. That's a very high rate for an established economy. An advanced economy, the tendency, and this has been in the literature published, is as per person GDP increases, meaning the country becomes more wealthy, the entrepreneurship rate tends to decrease. One reason is in a developing economy, as the economy develops, there are more salaried jobs as the economy develops than there used to be. So the US rate, though, has really done quite a bit in the last 12 years. And it just shows how exciting entrepreneurship has become to a lot of people, especially young people. Now, looking at the big four, China has declined from up around 14, 15%. Actually, before Xi Jinping took over China, the rate was up between 15 and 20%, quite a bit. So over the last, 12 years, the rate in China has dropped down to 5.43%. In a real shock, both to people in China and in Japan. In the year 2022, which is the last year we have data from Japan, the T rate in Japan was higher than the T rate in China, despite the fact that Japan had the absolute horrible reputation for not having favorable conditions for doing entrepreneurship. India has seen kind of something that tracks the US kind of sort of, although it's relatively steady, 12.8% in 2012, 12.2% in 2024, with a lot of variability. Sometimes variability could have to do with the survey. 2,000 people is not a lot of people in a population of 1.3 billion, right? But it could also have to do with external factors such as perception of political problems or some sort of natural disaster or whatever. I really didn't go in to see what was the problem in India unless it was COVID. That was 2020. Although the rate really bounced up in a hurry in India. In China, you didn't get any data at all during the 2020-2021. This is Japan, where I lost the line that links those numbers. Anyway, that's what the big four look like. If you look at the Asia tigers, all of them are consistently lower in entrepreneurship than at the T rate than the US is. The US T rate I put in for comparison. The one that tracks it the closest is South Korea. And South Korea really increased from low of 6.6% around 2012 to 11.7% now. But notice that all of these economies have this kind of traditional aspect where the rates are lower than in the United States. Taiwan has seen a drop since 2020. It actually seems to be behaving kind of like the mainland China. And unfortunately, with Singapore, we only had data for 2012 through 2014. And in Hong Kong, only data for the year 2016. So you really can't tell what's going on there. But it's kind of distinctive that these very late stage developing economies or new advanced economies all have lower T rates than the US. Developing Asia is all over the place. And the US line is kind of right in the middle here. The blue line here is Thailand. And Thailand does have a high entrepreneurship rate. One of the other interesting things about Thai's entrepreneurship rate, the T rate, is that more women are involved in entrepreneurial activities than men. For a lot of economies, that doesn't really play out. The things to note here is wide year-to-year variation probably indicates an economy in the midst of rapid change. It could also have to do with political instability and that kind of thing too. I think it's interesting that they're having a harder and harder time getting the developing economies to participate in the survey. They will not accept results unless they get 2,000 legitimate answers for a country. So that could be what's going on there. Now, if you look at the attitudes toward entrepreneurship, especially by people who are not engaged in T, the US is kind of distinctive here too. We have had a very strong self-confidence in our capabilities to be entrepreneurs forever. So 55.9% back in 2012, 55.7% of the people who are not actively engaged in entrepreneurship think that they have the capabilities to be an entrepreneur. The other thing that's high in the US is the sense of opportunities for entrepreneurship. This really looked out amazing between 2012 and 2018, where you saw this rise from 43.5% to 69.8%. But then you had a lot of variability for the last 8 years or so, and it's kind of back down to, almost 60% of non-entrepreneurs think that there are good opportunities for entrepreneurs. The fear of failure has gradually, slowly gotten higher. I think that may have to do with self-reflection on entrepreneurship as much as on anything else. The kind of interesting thing, though, is something happened after 2017 because the ratio of the T rate, people who are entrepreneurs, to people who intend to start a company within the next 3 years gradually diverged so that the people with entrepreneurial intentions are now less than the people who are entrepreneurs. That kind of is an indication that we're not going to see the T rate go up that much more. I would expect to see, if anything, things go back down maybe toward the 12 or 13% range. In India, I thought we were confident, but oh my gosh, 85% of the population who is not engaged in entrepreneurship think that they could be an entrepreneur. And that reflects an incredible jump that happened between 2018 and 2019. So something happened. The other thing that has gone up, though, is the fear of failure rate. Notice that the fear of failure rate in India is almost 20 points higher than the fear of failure rate in the United States. The opportunity index, hard to see it because it's so close to the capability thing. 84% of the population sees good opportunities for entrepreneurs in India. And the people who have the intention to start a new company is significantly larger than the people who are actively engaged in entrepreneurship activities, right? Which means that we will probably see more entrepreneurs coming out of India. What happened with China? With China, something happened in 2018 to 2019 that really led people to see amazing opportunities for entrepreneurs and to give themselves a lot of, credit for entrepreneurship. And then you have the blank for the 2 years of COVID. And as soon as we got out of COVID, things didn't look nearly that good, but they don't look that bad, right? This is very close to the American rate, perception of opportunities for entrepreneurs, 54.8%. And the perception of ability to be an entrepreneur is a little bit less than the US, but not much. The fear of failure is higher than the US, though. Why? What are the kind of things in an economy that make people more afraid of failing? Generally, it has to do with consequences that you can't overcome. Here in the Valley, we're not really that sweet on failure, as people say, but we recycle really well. If somebody fails in a company and they know how to do something, they probably are not going to repeat that mistake, and they may have a chance with more investment very soon. If you don't have that situation, if there are consequences, either social or economic or even legal, to failing with a company, then the fear of failure should become higher. What's kind of interesting in China is that the entrepreneurial intention rate used to be significantly higher than the actual T rate. But after COVID, they're right next to each other. So that probably you're not going to see a whole lot of increase in entrepreneurship in China anytime soon. Japan. So yes, the fear of failure is consistently high, but that's not as high as it is in the United States. What really, I think they didn't even get past the first two questions on the survey. Do you have the ability to be an entrepreneur, and are there opportunities for entrepreneurs? Less than 20% of the population in Japan sees opportunities for entrepreneurs or sees themselves as having the capability to be an entrepreneur. That's sad. Sure enough, the T rate is actually higher now than the entrepreneurial intention rate, which is another indication that this situation is probably not going to change anytime soon. So this is kind of what's happening with just attitudes in the population toward entrepreneurship. There's one other thing to notice. I couldn't get the figures in time for today from 2024, but back in 2022, if you look at whether men or women are engaged in actual entrepreneurship, in the US, it's a little bit higher for men than women. In India, it's almost exactly the same. And I have seen ratio that says 0.98%, equal to in India just in 2024 as well. In Indonesia, actually more women were being entrepreneurs. Another place I mentioned just a couple of minutes ago, Thailand, has a major difference. More women are being entrepreneurs than men are. The places where it's most unequal are South Korea and Japan, where women clearly don't see the opportunities or don't see the capabilities, or they have a fear of failure that is significantly more negative than men. So as we go through our sessions in the series and we hear from people in these countries, keep this in mind. Let's see if we can find out directly from people on the ground what the situation looks like to them. But moving to the broader ecosystem, people are not just entrepreneurs. To have an entrepreneurial ecosystem, your startup companies have to be able to grow, which means that labor force is absolutely critical for startup companies to be successful. The other thing is you need flexibility in the labor market for post-exit opportunities, no matter whether it's a successful exit or a bankruptcy, right? This whole thing about there's another job if you have demonstrated you can work well. So with people, you really can't just look at the entrepreneurs and their advisors. You have to look at the broader labor force. With capital, it's really friends and family, and then angel money at the early stage. At the growth stage is where the VC industry really kicks in. And then what are the exit patterns is critical to look at in capital. With knowledge, this is commercialization, right? Do you have the potential to create business around some new research result? The kind of knowledge capabilities also includes how-to knowledge like design thinking and a certain amount of really understanding the dynamics of markets and problems, business knowledge as well as the technology knowledge. Here you get into lean startup principles, and over here, I have one slide later in the presentation that I want you to notice because Silicon Valley is really famous for companies that used to be startups, not so much for startup companies. And so the shift in mindset from being a startup around one idea with one kind of dominant sort of, CEO founder type to being a big company that's managing an entire strategy for innovation is something that has to happen. They also have to globalize typically to really be successful post-exit. And of course, you've got the infrastructure too. So yeah, there are entrepreneurs in every society. You couldn't stop them if you wanted to, really, even if the conditions are very unfavorable. But the problem is qualitative as well as quantitative. I showed you all this stuff about the T rate from the GEM survey, but who is going to choose to be an entrepreneur? One of the problems in Japan used to be that if you couldn't get a job with a big if you didn't get a job with a big company, people could not believe you would choose to be an entrepreneur instead of going to work for a big company that had all the resources that you would need in order to achieve your vision. The middle to late stage startups really have the biggest people problem. And this is not just Japan, this is really all across Asia. There are not many really top quality people who are willing to go to work somebody else's startup. The incentivization is much more sophisticated than it was 10 or 15 years ago, but still I'm seeing equity not being used as cleverly as it is here in the Valley in terms of how to get good people to come to your startup company and make it grow. Salaries are lower. I mean, this is actually a huge opportunity that some investors and entrepreneurs are taking to start companies in a place where engineers are a lot cheaper than they are in the Valley. And the other thing that affects the people is what kind of clear expectations are there for exit? If you're really getting into somebody's new family company and it's always going to be that family company, of course, the stock options are not that interesting. Um, yeah, the social stigma is really more about the reputation of the startup sector than it is about being an entrepreneur. It's not so much that being an entrepreneur is not admired or valued. It's that joining a startup company doesn't bring you with a lot of good things in some economies like Japan. Also, there's still not that much mid-career hiring in Japan. Those of you who've been following Japan know that there is a new type of company, a new type of job called Jobugata, which basically is a job that has a job description. Because most promotions were done company internal by the centralized personnel department, most management jobs did not have job descriptions. And so this means that if you leave your manager job and go start a company and the company doesn't work, no one knows what to do with you in a big company because none of the jobs have descriptions. So finally, this is starting to change in Japan. And it is true that across Asia, you get entrepreneurs who tend to stay with their company after exit. That's fine if they learn something along the way and learn how to run a big company, but most of them don't. And that means you have this S curve where you'll see rapid growth for a startup, but then about the time of exit, it tops out. The company gets 50 million, $100 million of revenue a year, and it's just not going to aggressively grow beyond that. The entrepreneur who got it to that point is too happy. So that's the sum up of the people thing. Let's look at capital flow for a little bit. So global venture funding had this huge spike in 2021. And the huge spike was especially in the mega deal sector. Half of the money invested in venture capital in 2021 was going into deals more than $100 million in size. This was because everybody wanted to be in a hurry to get back into the market after COVID, after the shutdown and things were not going well. If you're an investor, of course you want to be an early investor. That's where you make all your money. And so there was way too much money invested in 2021. And 2022 and 2023 were definitely almost like hangover years after having been kind of drunk before that. There was suddenly, it came up that inflation is not going away easily. There were higher interest rates because inflation was high. There were all the geopolitical tensions that were definitely not helping, like Russia invading Ukraine. And so the venture capital industry really shrunk. But it started to make a turnaround in 2024. Don't even look at 2025, right? This is only a couple of months. I think that if you're looking at, it's probably going to be close to 2024 or maybe even a little higher, depending on what happens. This was really Q1. So it turned around a little bit in 2024, except one thing that I notice is that the mega deals have had a very large percentage of worldwide venture funding, 50%, were over $100 million. Why? Well, it doesn't take too many deals when, Microsoft puts in $1 billion something or whatever. These kind of mega deals almost should be eliminated from venture capital calculations, but they definitely are there. Worldwide, globally, you saw what we saw on the last slide. There was a little bit more money invested in venture capital in 24 than there was in 23. Asia Pacific was completely flat. This is not counting China or India. The US showed a definite increase in 24 over 25. The UK was flat. China went down. 80% as much invested in 24 as was invested in 23. And India went up. 1.4 times as much was invested in India in 24 than in 23. Now, remember, China's big, right? $45 billion in 23, $37 billion in 24, whereas India went from 9.6 billion to 13.7 billion. This is the way China looks in more detail. You see the boom in China, but notice the interesting thing. The real boom around 2021 was foreigners co-investing with Chinese. After 2021, the foreigners are kind of out considerably. Several things are going on. Okay, there's the decoupling, which is, you know, it's hard to do business with China from the US now. The other point, though, is that because going public on a US market is almost not at all interesting in China, the demand for dollar-denominated investment is practically nil. Something like less than 5% of the investments into Chinese startup companies are in dollars. They're all in renminbi now. So who has renminbi? People in China. That means that the foreigners are kind of really out of the picture more than they used to be. In India, the overall pattern looks like this. You see this kind of, okay, so they had their boom in 2021 as well. Driving things, according to this source, this is Bain's yearly survey of venture capital in India, is that there has been a rapid scale up of global venture capital firms setting up domestic presence in India. This was what was really going along in 2017. When I first started doing these seminars a long time ago, India had like, you know, less than $300 or $400 million a year of venture capital funding. And it was, you know, a few people who were really early into that. And so the amount, you know, moving up to $4.7 billion of venture capital by 2017, that did involve like 90% of the deals had foreigners involved in them. The interesting thing that Bain mentions about this difference between 23 and 24 is that the increase came from the number of deals, the deal size, and from that, the valuation of the startup companies was pretty flat. Didn't go up, didn't go down. It was all increase in the number of deals. What's really increased is consumer tech, which is the biggest single segment, 5.4 billion out of 13, and other consumer retail. Software is also a big player, 1.7 billion, and banking and fintech and so forth, 1.1 billion. Those are the biggest sectors of what people are investing in India. What does that tell you? A lot of it is driven by new spending power by consumers. They want financing, there's software to be doing things to help sell to people, B2B to C kind of plays. And so India has been that way. Our session on India next week is about the emergence of deep tech startups in India. This is the new thing, and we're going to hear a panel to discuss this from the ground. In Japan, there has been a remarkable, you know, increase in the amount of venture capital, but notice that up at the top, it's only $7 or $8 billion. So what? The US had something like $300 billion invested from the US in 2021. The deal size is currently shrinking, especially for follow-on money. Because of the blips around 2021, 2022, valuations were higher than they should have been. And so there are more down rounds with companies not able to raise money at the same stock price as in their previous funding round. Japan is distinctive. This doesn't really, you can't see this from this chart, but something like 80% of venture capital deals in Japan involve at least one strategic corporate venture capital investor. Toyota Ventures is investing large amounts of money. That is complete flip to the United States, where about 20% of venture capital deals comes in with strategic CVC. The venture funding increase recently was led by AI. So about, $500 million was invested in AI in the first half of 2024. We will have an AI company coming from Japan in a couple of weeks. So I'm excited to hear what they say to tell us that Gen AI is old hat. We will talk about, this will be an interesting session. In South Korea, you're seeing the same kind of shrinking deal size as in Japan. The amount of money has gone down a lot. The number of deals has not gone down a lot. Therefore, each deal is smaller. I would expect, smaller valuations. In Southeast Asia, what you're seeing, and remember, you're looking at something really only around $2 or $3 billion a year for the entire amount of investment in venture capital investment in Southeast Asia. Fintech, software and IT, e-commerce. Okay, green tech is the next biggest thing. Data analytics and so forth. All of this is to support consumer-facing businesses. It's not all B2C, but it supports B2C. And this is kind of what you would expect from a rapidly emerging middle class. So this is kind of the drivers in Southeast Asia. This is what I wanted to talk about Silicon Valley. So I checked Yahoo Finance today, and these are the market caps of some of our favorite Silicon Valley companies. Notice how much they have grown since they went public. It's the post-exit growth that really makes Silicon Valley companies famous, and that really makes Silicon Valley famous, as much as the entrepreneurship itself. That kind of thing requires two things. That sort of growth after exit. First, global expansion is absolutely essential. You cannot get that kind of value to a company if you're only selling in one major market, even a big market like the United States, especially with a technology play. The second is you have to develop the innovation capabilities of a big company. You have to know how to work with the startups to improve your own innovation capability. And you have to be able to do what they call ambidextrous innovation. Add value to your existing business and look for new value from new kind of business opportunities. This is why Silicon Valley has been famous and why we have so many more unicorns in the United States than you do anywhere else. So in 2023, only 2 unicorns were created in India, 8 unicorns created in China. At one point, the total number of unicorns created looked like it was going to catch up to the US, but it just didn't happen. A lot of that is late stage. Does a private company, startup company, deserve a valuation of over $1 billion. It does if you expect its future growth to be huge. But going back to this, notice that China is kind of the one exception in Asia that has really built some global companies. Xiaomi's market cap is 1.17 trillion Hong Kong dollars. So calculated at today's rate, that's about 150 billion US. Ant Group at one point had a valuation of 313 billion. But notice that, you know, that's a little bigger than Salesforce, but it's nowhere near Meta even. Baidu, 31.5 billion. This is an area where Asia will be looking to grow from now. So expect more of the late stage growth as we move forward. Most exits are by M&A. It's typically kind of 10 to 1 or even a little more than 10 to 1 between exits, successful exits, not bankruptcies, by M&A or you know, buyouts, as opposed to IPO. And you know, the amount of money generated by M&A is something around, calculate this right, $33 trillion of stock value was generated through M&A last year in the United States, and only, you know, several hundred billion came through IPO. So the chances are your company is going to be bought by somebody else. In Asia, though, the number of M&A and the number of IPO, you did have this wonderful thing near the end of 2021, right? Where everybody was looking really good. And then it really came down to much less M&A, even though the amount of IPO is relatively stable. So this is an area where I expect Asia to be growing from now. Real briefly, one slide on the kind of flow of knowledge. Every government in Asia is pushing innovation. I think that when that's a wonderful thing. However, what they're really missing is that everybody who is in a university is not going to become an entrepreneur. But everybody in a university really needs to have a little bit of business knowledge before you graduate. That's what has been neglected. So there's not enough attention to the flow of business knowledge to new company founders. Mentoring is still not well developed in Asia. Some of this might be Confucian. You know, we argue about things and both sides learn. That's the Western Platonic dialogue model. In Asia, it tends to be more Confucian. You imitate the master and you learn inside yourself, but you don't talk about the master of what's going on. You just imitate. But I think the real issue in Asia is that there are still fewer serial entrepreneurs who really pay it forward, either as an angel investor, as an advisor to a new company, or even as an advisor to an investment fund. And there's kind of less nurturing going on in investor management relations. It tends to be less hands-on in Asia. And I think that the more that foreign investors get involved, the more the startups are going to have to become more sophisticated in how they handle this issue. Knowledge flow between business partners is also typically inflexible in Asia. Open innovation, joint development projects have to have a different kind of dynamics than outsourcing. Outsourcing, you want it on time and to the specifications you set up front. With open innovation, you're both learning how to bring something new to market. So that's a little different. So that's really the prepared remarks on what's going on in Asia entrepreneurship right now. I'm excited about this panel next week, which will be on the emergence of deep tech startups. In a couple of weeks, I mentioned we have the Japanese AI company. Another thing that this company indicates that I think is fascinating is John Tarifi is not a Japanese name, right? So you're seeing many more international groups mixing Japanese people and non-Japanese people in startups. And we will have a bye week in a couple of weeks, in a few weeks, on the 22nd. Then Earl, who has been a good friend to our center for many years and has spoken for us in the past, will talk about accelerating the startup and innovation ecosystem in the Philippines. On May 6th, we're looking forward to Dr. Ben T, who is a Stanford PhD. He's now the president of National University of Singapore Enterprise, and he'll be talking about growing the Southeast Asia kind of entrepreneurship ecosystem. And then Dr. Kingsley, sorry, there's an S there, Kingsley Leon, will talk about unibioscience, which is good kind of, IT and bioscience. On the 20th of May, we have something really kind of interesting. The Kumbh Mela just happened in India. Over 650 million people gathered in one city over a 45-day period to take ritual dips in the Ganges River. So what kind of impact does this have on the economy? Dr. Kapoor and I are writing a paper on this, and he will come and talk about how the entrepreneurship aspects of this. And we do have a couple of more sessions beyond that until we finish up on June the 3rd. So yeah, welcome to the series. I'm happy to answer a few questions. And for now, please fill out the survey and turn it in. And there will be a way to do this on Zoom, right? To fill out a survey and send it back to us on Zoom. You'll set that up so that people can use it. Great. Thanks, everybody. What's wrong with my talk? Let's get to the questions. From the audience? Okay.
You mentioned something very interesting about US able to cycle fading.
Yeah.
I'll do more about that.
So nobody is happy if company fails. If an entrepreneur gets people's money to start a company, and it's not only the entrepreneur's money, nobody's happy with that. But I think that we have a very good kind of sense of communicating what we learn from this. And the investors who would be looking at funding another company often have a preference for people who've worked together on a team. Even if the previous company failed, if these people want to work together again, the risk is much lower than it would. So that's what I mean by recycling. Thanks. Great questions. Other questions? Go ahead.
President Asher. So during the macro slides, you mentioned that in China, they are investing a lot in foreign direct investment now.
Yeah.
I'm curious as how that approach, in the 2010s, there was the Belt and Road Initiative, right?
Yeah.
And then now there's EV investments. Could you expand a little bit more on how their approach has changed since that period?
Well, I think that the government gave the initial stimulus through Belt and Road. And a lot of that was direct government money, but from the very beginning, it leveraged a lot of private sector money. A lot of the construction jobs involved in building the high-speed rail in Southeast Asia or the ports in wherever was done by private sector companies from China. And so some of that money went back to the Chinese companies, Chinese government money going to Chinese companies to do business in other countries. But increasingly, the successful Chinese companies are doing things like buying factories so that they can make cars in Thailand and sell in the Thai market. Baidu has, they all bought, all the major EV makers in China seem to have bought factories in Thailand or set up joint ventures there. So you're seeing more activity, and this is going to be intensified. US aid has disappeared, right? So guess what? China was right there when Myanmar needed aid this week. So I think that if the US stops focusing on its global kind of activities and global business relationships at the startup level, there will be other people who will come in and be happy to do it. And for the world economy, that's not a bad thing. Okay, go ahead, Kimberly.
How would the international landscape change if you included innovations at blue chip companies like IBM and NTT, as well as Microsoft and Amazon?
That's an important integral part of a national innovation system. And I think that, again, the Silicon Valley new big companies are much better as a model than an old company that has such a sense of self-prestige that it doesn't interact well with startup companies. But, you know, the Japanese have really been working at doing open innovation. Something like 87 or 88 Japanese companies have innovation groups based in Silicon Valley. And one data point I remember is between 2016 and 2020, the amount of corporate venture capital that those companies invested in Silicon Valley was equal to the total amount of venture capital invested in Japan. So they've been working at this. They've got the front side well. The problem is integrating it with business. And that's always a structural question. This is one of the things we look at here at our center is how do you get an idea out of this whole innovation world and into a business unit? The business units are already really busy. They are not particularly interested in learning something new. They want to make money with what they have. And so how you can get that done is difficult, but it is absolutely key to a good national innovation system. I don't think the numbers would change. It wouldn't be that much of a surprise to see how it works. The US has had a fascinating, a couple of data points. In 1980, 4% of new US patents did not come from big companies. In 2000, something like 35 or 36% of new US patents came from the startup sector or the university sector. So you just see this increased reliance of the big companies on the whole kind of startup innovation system to make national innovation happen. Asia's a little bit behind us. Thanks. Other questions from the floor? Go ahead.
Hi, my name is Jonathan, and I'm running a startup, a digital health startup in here. And I have potential investors from Hong Kong and also in Taiwan, interestingly.
Okay.
What's the pros and cons in terms of taking foreign investment? I know there's a lot of regulations, compliance on that front.
I think that the biggest danger is whether you get along with the investors. The investment is a relationship of incredible trust. It has to be. I mean, at some point, these people may be on your board, right? And you need to know that they not only really buy into your vision, but you communicate well with them. You feel good about it. I think that's a much bigger danger than whether they're in Taiwan or Hong Kong. The US has this regulation about all foreign investment, where it has to be vetted, and that will cost you money. because you have to get a lawyer to make sure that you're clear. And that has been a major disadvantage to getting foreign investment. But once you have an investor credited that is clear they're not connected with something on the entity list or whatever, then it should be relatively easier. With all investors, you want to know what dynamics they're under. What kind of LPs do they have? What kind of pressure are they under for their fund? If they're getting toward the end of the fund, they may be much more likely to push you to an early exit. So you need to know all those kind of things that is regardless of whether they're from Asia or not. I think the big thing is you really want to understand your investor. Know as much as you can about them. And of course, there is still knowledge arbitrage, right? The more you know about what's going on in Taiwan, the more you know what your investor, possible investor in Taiwan's thinking. Great question. Thank you.
If you don't mind. we
Yeah,
can-
go ahead.
I mean, yeah.
Yeah, okay.
So I'll follow up with you.
Sure, we'll follow up. Thank you. Good question. One more from here. Yeah.
The innovation management of large Japanese companies can be said to be at an early stage, like a stage A, compared to the advanced level in countries such as the US. What do you think about the measures and management needed to move on to the middle stage?
Thank you. Richard-san.
You're welcome. Hi.
Hi, Noda desu. Wrong.
Okay, thank you very much for your question.
Yeah, thank you very much.
So I think that the move on will happen. It can't be avoided. But people who've lived in Silicon Valley for a long time are used to the incredible uncertainty of jobs here. We're used to an unstable situation. That's why Silicon Valley can be so dynamic. The more comfortable you become, the more dangerous it is. I think that the Japanese big companies at the particular stage of economic development of Japan from the 1960s until the early 1990s or so, the economy was driven by the big companies and their innovation capabilities were good. They could control the whole thing. I remember in 1987 being in a closed briefing in the American Embassy about the future of high definition television. And one of the people in that briefing said, Sony's got a 25-year marketing plan already. And so something that is well-planned, roadmap, is comfortable. And what's happened is we're in the middle of a digital technology revolution, and being comfortable is the last thing that you want to be. So the Japanese companies will move from this stage A to being more innovative, more aggressively partnering with startup companies, more able to see that they cannot control the pace of innovation. Something comes along like ChatGPT and suddenly the whole AI world is different, right? In 1 month. So I think that that's going to be a major change you see on the Japan side. Unfortunately, it will feel uncertain. And that's the kind of situation that people need to be prepared for, is how to enjoy the dynamism of not knowing whether you have a job next week. That's the best I can do with that for this session. Thanks for your question.
Thank you very much. Thank you.
I think we've got time for maybe one more question. Go ahead.
Hi, Richard. I just want to know that do you have any research on the innovation, the metrics for innovation between all the countries?
So there are several like global innovation index kind of things. I have to say that I'm concerned that innovation is one of those words that it's such a big thing that it's like the 7 blind men trying to figure out what an elephant's like. Everybody experiences a piece of it, and very few people see the whole thing. And I think that I'm kind of frustrated with the sort of way that innovation is defined. And until people really understand what's going on better, the indexes don't make that much sense. I will be a consumer, but I look very carefully at what they're looking at. You know, it was fascinating. You will have somebody like The Economist come out and says, Japan is one of the most innovative countries in the world because they're looking at creativity and new idea creation. But delivery to the market, being able to really change the world, kind of like the companies out of Silicon Valley changed the world, they were not happy with that in Japan. So it's really hard to measure the innovation side. I think that we all need to really, my favorite definition of innovation, by the way, is that it is responding to or anticipating some change by creating value, which puts it as one of the three big alternatives of human beings. You can fight, you can run away, or you can innovate. And we've done really well in our history by innovating, creating new value, whether it's a new tool or whatever. And value only exists if you have a user and a provider. It doesn't exist outside the fundamental economic relationship of buyer and seller, really. So that's kind of where I am with that. I'm afraid we're out of time. Look forward to being together with you again and each week from now until June the 3rd. And hope that you will enjoy the series. Thanks, everybody.